Hi, it's Igor. Today I would like to talk about the topic that comes almost every single day. And the question is, what is the difference between the APR and the interest rate? And more importantly, what are my monthly payments going to be based on? First of all, we need to establish the basics. And what I mean is that we need to understand that on one side, you are going to have amount of money that you're going to borrow from the bank. We call it principal loan amount. Let's assume it's $300,000. And on the other side, you are going to have amount of money that you will spend to get the $300,000. And we call this closing cost. If you want to know more about the closing cost, how they calculate it, what companies involved during the mortgage process and how all the process works, I actually created a separate video that is also available for you to watch on my YouTube channel. What is the interest rate? The interest rate is the cost that you will need to pay every year to borrow the money expressed as a percentage rate. It does not reflect or show any fees or any financial charges that you are going to pay to get the loan. Your monthly payments will be based on the principal loan amount if you're going to take conventional loan, and in our case it's going to be $300,000, and it will be shown on the promissory note that you are going to sign at the closing. If you take FHA loan, the interest rate will be calculated on a different loan amount. Every FHA loan will also have the basic loan amount. In our case, it's $300,000. And then since every FHA loan will also going to have upfront mortgage insurance premium, which is 1.75% currently, what you need to do is that you will need to take the $300,000 plus 1.75. So the new loan amount, which will include the upfront mortgage insurance premium, will be $305 to $50. So if you are going to take the FHA loan, the interest will be calculated on $305 to $50. APR, also known as the annual percentage rate, and APR is a calculated rate. It's a broader measure of cost of borrowing money than the interest rate. It reflects the interest rate, mortgage broker fee, mortgage insurance, and some other fees that you're going to pay to borrow the money. This is why the APR is almost always higher than the actual interest rate. But just to avoid any confusion, APR does not impact your monthly payments. The interest rate is what your monthly payments are based on. Another question my clients ask, should I compare interest rate or APR when I'm shopping for a mortgage? Both numbers are important, APR and the interest rate. But what is more important? Some experts say that the APR is more important because it reflects the interest rate and the closing cost. So it's real cost for the mortgage. However, today's, like a lot of shoppers, they have a lot of flexibility in choosing the upfront cost and the interest rate. So you should choose a combination of long and short-term costs that makes sense for you rather than looking for the APR or the lowest APR and the interest rate. Some people will prefer to buy discount point and get the lowest interest rate for the next 30 years. On the other hand, other people will prefer to save on the upfront cost and get the market interest rate. Every person's situation is different, so it's best to call us and we will advise you what is the best option for you. Thank you for watching this video. I hope it will clarify the difference between the interest rate and the APR. If you do have any further questions, please don't hesitate to call me on my awesome team. And please don't forget to subscribe to my YouTube channel.